Investors suffered an additional loss of about 425 billion naira today as the Nigerian equities market continued on its downward spiral. That's the worst it has witnessed in years. Key market indicators depreciated by 816 basis points or 3.35% to close at 23,572 basis points compared to 24,388 basis points yesterday. And at the close of trading, there were 14 losers against 18 gainers, which were led by Nestle Nigeria. Of course, Nestle led the table, followed by Dangote Cement. Corn Oil also was on the chart of losers, and Nascon Allied completed the list of 4. And conversely to the gainers on the floor of the market, Unilever made the most gains of 1 naira and 5 kobo. UBA, Vitafoam, as well as UACN also survived the market pressure. And moving on to market summary now, in all, sell-offs worsened in the market as volume of shares surged from 594 million to 1.3 billion units today, and the value of shares also skyrocketed by about 13 billion naira to close at 17.6 billion naira, and that's in 7,150 deals. But now, to help us further understand this dwindling situation, I am now being joined via telephone by Paul Uzim, a stockbroker on the Nigerian Stock Exchange. And first, I'm going to ask you, these are not exactly the best times for the NSE, and this has got many people worried. Now, tell us, if the market continues like this, what would be some of the impact on the country?
Hello.
Paul, if you can hear me, I'm talking about the dwindling situation we've been seeing on the stock market. And I'm saying, if the market continues like this, what could be some of the impacts on the country?
Well, the reason why we are having this sell-off of stock right now is that foreign portfolio investors who are very, very fluid, who have been in the market, who have been investing in the market over a long period of time, are wary of the one, global trend, and 2, the impact of the slump in crude oil prices on their investment in Nigeria as regards to exchange rate risk. They are looking at the possibility of further devaluation in naira, which could affect their investment, and that's causing some sort of panic among foreign investors. So what you are seeing now, right now, is that they are selling off to cash out from the country, from our market, before the risk of further devaluation crystallizes on them.
But these factors that you have mentioned are not peculiar to Nigeria. But do you think that there might be better prospects for the market in coming days?
From what we saw today happening in the market traded as much as 17 billion naira. That's unusually high for our market. Typically, we do within, on the average, about 4 billion naira worth of trade on a daily basis. Today alone, market did about 17 billion naira. So a large number of those people who were trying to sell out of panic have been taken out. So though tomorrow you still see a situation where the market still adjust down a bit, but I expect that by weekend, by Friday, that this run on in the market would have petered out. So by next week, you will see some sense of sort of stability coming into the market again.
All right, and lastly, before I let you go, what measures do you think authorities can put in place now to ensure that we see a rebound in the shortest possible time?
The market is is a capitalist market with pre-entry and pre-exit. There's little the government can do, but from the monetary authorities, what they could look at is putting in place policies that could allay the fears of this class of foreign portfolio investors, by, for instance, introducing forward contracts into the FS market, which would give them the assurance that, okay, maybe perhaps in a year time or 2 years time they can sell, 6 months time, a year time, they can see exit Nigeria should they want to at the current exchange rate of maybe 360, 370 range. And if they see that, or maybe at the premium, maybe at 380, if they see that, then I think that this rush, this panic would ease off.
All right, then, stockbroker Paul Uzim, thank you very much for joining us on News
Yeah,
Now.
thank you.